by joining this wonderful webinar, which is a collaboration with CME to have a topic regarding on the US indices. My name is Yongxin from Philip Futures Marketing, and I will be the MC for today. During the webinar, if you have any question, do type them into the question box, and I will address the questions during the Q&A session at the end of the webinar. Before we start, I would like to do a sound check. Okay, I think most of y'all can hear me loud and clear. Please allow me to introduce our company. As usual, I will need to emphasize on our disclaimer, where this presentation has not been reviewed by the Securities Commission Malaysia, and it is provided to you solely for general information and does not constitute any recommendation. We are not liable for any losses arising based on this information. Investments are subject to investment rates, therefore you shall seek advice from qualified advisor before making any investment decision. Philip Futures is a wholly owned subsidiary of Philip Capital Holdings Sdn Bhd, which is incorporated on 7th of October 1995. Our headquarters is in KL, and there are branches distributed Johor, Kuching, and also our soon-to-be open branch in KK. Other than that, Philip Futures is a trading participant of Bursa Malaysia Derivatives Berhad, clearing participant of Bursa Malaysia Derivatives Clearing Berhad, and also a holder of Capital Market Services license. And I would like to take this opportunity to extend our gratitude on behalf of my company, Philip Futures, to our clients. Without you, we are unable to achieve the awards. In 2020, we have achieved 3 awards from Bursa Malaysia: the best overall, the best retail, and the best institutional derivatives trading participant. And our mother company, Philip Capital, has offices and branches over 14 different countries. For futures, we do not only cover products in Malaysia, we also covered from different exchanges such as Singapore Exchange, CME, Cboe, NYMEX, and etc. With our strength of global the products available, we have the futures and also the contracts for differences CFD. Why should you choose Philip? First of all, we provide advisory service such as inquiries. Next, we provide wide array of products for future that enables client to trade both local and foreign products. Other than that, we send out the latest market news and commentaries to clients every day through email for references. Lastly, our headquarters have 24 hours broking and execution support. This is important for clients who trade foreign futures, and we have dealers who can assist to your inquiries anytime. No matter you are our client or not, we do offer one free one-to-one coaching session, free seminars and webinars, and free account opening. For free one-to-one coaching session, the key topics that we will be focusing on: the introduction to the futures trading, the product knowledge, platform free seminars and webinars regularly, but since we do not organize seminars at the moment, we focus to provide more live webinars with different topics for you to join. This will be our upcoming webinars, which will be on May 18th, 7 to 8 p.m. The title will be on Green's Outlook, Will the Rally Last? The platform, we have successfully launched the first futures trading online account opening in Malaysia. You can now open futures trading account online with no hassle. If you wish to open futures trading account online, feel free to visit our website, or you can scan the QR code and it will directly link you to the online account opening form. For free account opening, you will receive a complimentary mobile and desktop platforms at no cost and access to a wide array of products, including global, future commodities, interest rate, indexes, and metals. The platform for futures trading is Philip Nova, which are commonly used by our client to access the global products. For the application, which allows you to trade anywhere and anytime. And for our currently ongoing promotion, it will be time to get into futures. You are able to trade agricultural and US indices futures to receive cash rewards up to 1,000 ringgit. It will be until the end of this month, which is 31st. If you have any queries, please do not hesitate to contact us even through calls, emails, website, live chat, or Facebook Messenger. Our representative will contact you as soon as possible. And our speaker for today's webinar will be Mr. David Loh. Mr. David is the managing partner of Xmodus Trading Group, a consultancy firm that specializes in bespoke trading strategies and coaching services for private or corporate clients. David has 25 years of experience in the Malaysian listed derivatives industry and has held leadership positions in futures broking division of Brokers Association. So without further ado, let's invite Mr. David to start his session.
Thank you, Yongshin, for that wonderful introduction. And how is everybody? Good evening. We have a very interesting session coming up. And first and foremost, let me thank Phillip Futures for hosting this event, and also to CME Group for sponsoring tonight's program. We have this topic tonight, catching the next major trend in the US indices. I think this is interesting to everybody. Especially those who have been following the US markets. Last night has been quite an interesting sell down. So a lot of questions must be in the minds of everyone on how is this trend in the US index. Is it going to continue to carry on its strength? We all know, and we have all observed over the last 1 year that the markets have been going up very strongly in the US. Okay, so before I really jump into the session, just a quick check with everyone that you are hearing me well. I'm going to launch this poll here. Just a quick check, show hands of how many can hear me good and well. Okay, it looks like the audio is going through. You can see the screen as well. Fantastic. I think everybody's okay. Thank you for your votes. Looks like everybody can hear nice and clear. All right, so let's start. Okay, this is a disclaimer. You've seen that just now. You've seen my picture. That's me. Yes, that's me. And okay, so this is what we're going to cover tonight. Okay, basically identifying the current trend. What is the current trend? Okay, obviously, if all of you have been following the last 1 year, the US markets, and you've just looked at the trend, it has been a very, very strong market since the last week of March 2020. The recovery started, and I think it has gone beyond a lot of people's expectation. This whole recovery on the S&P 500, on the Dow Jones, and especially strong is the NASDAQ and the technology stocks. So all this have seen the markets gone through new highs. Okay, there are still markets. In fact, I think at this present moment, the Dow Jones is trying to make, struggling a bit, but still trying to make new highs. So this has been an incredible market, and a lot of people have been asking, after such a long, huge run, okay, can this be sustained? You know, or should I be getting in at these current prices, because it seems to be very strong. I don't want to miss. If those of you who have missed the market, is this the time to get back in, or is this the time to buy? Okay, or is the market going to make a turn? All right, so yesterday I think with the developments, there was a sell down in the technology stocks, especially in NASDAQ, and it's got a few traders and investors quite nervous, right? With Janet Yellen saying that, possibilities of interest rate hike and all that. And you know, in terms of those in the equity market and the stock markets, the mere whisper of a interest rate hike is very scary to them. So of course, the U.S. Treasury Secretary came out later to try to explain that she's not trying to predict a U.S. rate hike or recommending it, but then that already also spoke to a number of players yesterday in the stock market. Okay, that goes to show that at this current moment of the market, quite a number of traders are asking those questions in their mind, right? So hopefully tonight we'll try to look at what is the current phase of the market momentum. We'll go in and look at charts, and we're going to look at longer term charts. We're also going to look at daily charts and even shorter term charts, and hopefully we have time to also look at some live charts at the end of the presentation. Okay, and by looking at those charts, we hope to be able to sort of study and together share with you some ideas of what is the current phase of the market momentum, right? So is it true that it is right on top of the market is already toppish, or is there a lot more room to go, right? Maybe taking a temporary consolidation and then again the next push upwards. We will see, right? For all the three indices, we'll go in and have a look. We also want to look at certain price levels. Okay, what are the potential price reversal scenarios? Okay, and also answer the questions: is the market going to turn into a bear market? Because a lot of if you follow YouTube videos and you go into social media, there are a lot of also experts saying that no, the stock market is in a bubble. You know, it cannot be sustained at these levels and all that. So those are the things that we want to go in and see and share some ideas on how the markets are going. And of course, after knowing certain of those directional scenarios, what are the trading opportunities available, right? And we would like to address it with the CME suite of futures contracts that you can trade, and you can take advantages of the trends that we will talk about in the next 1 hour. Okay, so this is the first slide, of course. Okay, bear in mind that I have some static charts here. Okay, later I have some updated charts. Some of these charts are from last week, Thursday and Friday, so bear with me. This is the Dow chart. Okay, in terms of looking at a weekly chart, this is a weekly chart. Okay, and you see the numbering here, 1, 2, 3. These are the numbering that are used for Elliott wave study, right? So Elliott wave is a way to study the particular phase in the market. For those of you who are very new to the Elliott wave theory, if you're not into technical analysis, basically the Elliott wave theory describes the various stages of a particular trend. So in terms of looking at a say for example a bull trend, okay, the originator of this Elliott wave theory says that and he has observed over time this theory was since the 1950s, and has been one of the instruments that technical analysts always use to look at the trends and also see whether the trend is in a beginning trend or a middle trend or the end of the trend, right? So in terms of looking at a bull trend, for example, what you see over here now, this is a weekly chart of the E-mini Dow Jones futures, right? And in terms of Elliott wave theory, in an uptrend, okay, in an uptrend, it starts with wave 1, followed by wave 2. Okay, you can see wave 2 is a consolidation, and it's followed by wave 3. And wave 3 is characterized by a very strong momentum and a very, very large move, right? So a lot of traders would love to be trading in a wave 3 trend, okay? And what you see over here in the Dow Jones chart is in the weekly wave, we are in wave 3. Okay, and wave 3, in terms of looking at the Elliott wave and in a impulsive bullish trend, the wave 3 is the strongest. Okay, so currently in terms of looking at a weekly chart, it is in wave 3. It is a impulsive wave that started originating from the lows in 2020. There's a wave 1 over here, and which corrected down. If you remember, in September, November, there was this 3 months September, 2 to 3 months consolidation that had a pause in the market, and then from there, before the end of November, from the bottom, it has a push up on wave 3. So this is a very strong wave in terms of looking at the face of the market. Okay, you can also see the momentum here at the bottom. There is a momentum indicator, and you can see that the momentum has continued to peak, and there's this ascending trend in terms of the momentum. So if you're looking at a weekly chart, which is determined for the midterm and the longer term chart, we're looking at currently the Dow Jones index, the Dow Jones futures is in a very bullish trend, especially on the wave 3 is a very strong trend, right? And there is a projected immediate target for wave 3 for the Dow, which is 37,000 and 37,047. Okay, currently it's trading at about 34,000, so it's looking at the first immediate target, another possible 3,000 points moving up. And there's also a higher target. If the momentum can be sustained, it can possibly reach a target zone between 43,000 and 45,000. So the picture for the Dow, looking at a weekly chart, looks like a very strong bullish trend with still some headway to go, right? So this is the weekly chart, and which is very bullish. Now we move down to the daily chart. Okay, so move down closer to the daily chart. Okay, in terms of the daily chart, what it is saying over here, you can see over here as well, the third wave denomination for the daily chart, which is also in a bullish wave. Okay, if we have done this particular webinar earlier, of course, I would have we will be talking about at this particular juncture, but it's on wave 3 of 3. So if it's a 3 of 3 is a very bullish kind of scenario, right? Because you're number one trading the shorter term daily chart on the third wave, and you're also trading that third wave within the longer term chart of wave 3. So that's a very strong momentum as well. Okay, but there's one thing that you need to note. Okay, at this particular juncture, okay, the bullish wave 3 phase may have a correction coming. Okay, how is that? How do we say that? Okay, let's look at this particular momentum at the bottom. As you can see over here, the wave 3, the prices are continually going up. Okay, and then in terms of looking at the momentum, okay, if you compare the momentum right over here, right, at where my cursor is, and at the bottom here, the momentum over here compared to the momentum in the middle is slowing down a bit, right? So there is a possibility, and you can also see the prices here on the Dow, it's flattening up a bit, right? So that is indicative of a possible correction or a profit-taking wave coming in, right? So so in looking at the particular what you call that target, okay, for wave 3, okay, wave 3, the immediate target is actually very close by already, 34,787. It hasn't reached out there, right? It's trading about 34,100, trying to break through this particular point over here. So we have about another perhaps 500 to 600 points on the Dow Jones to reach the immediate target of wave 3, right? So there is possibility that there's still one push up towards that particular target. Of course, there is an optimistic upside target as well, which is at the 37 and 38,000 if the momentum can really carry through, right? So that we have to see, right? If these targets cannot be reached, then there's possibility that the corrective wave 4, okay? So wave 4, what is wave 4? Wave 4 is the corrective wave after the wave 3, right? So say, for example, if wave 3 has reached its target and then come down for a correction to wave 4, as in Elliott wave theory, every bull trend or every strong impulsive wave has 5 waves. What that means that after the third wave, you would have wave 4 correction, and then followed by the next wave up, which is wave 5. And wave 5 is expected most of the time to exceed all the highs in wave 3, right? So this, if you're looking at the full trend of this daily trend, there is still a huge possibility that wave 5 will come, okay, and this wave 5 will continue to make new highs, right? So in terms of looking at wave 3, there's still another up wave left on wave 5, right? So those of you looking at that particular of this particular trend, bull trend, there is still that upside coming on wave 5. Okay, so we move down to even the smaller time frame now. Okay, just hold on a second. Wait, did we go to, okay, so this is an updated daily chart. So this updated since this afternoon. Okay, you can see that it's still consolidating, and at this particular, even at this particular time, it's trying to make a new high, right? But have a look at this particular price point. I want to point out this 33,572, which I've written a line over here. This is an inflection point, right? So if the prices cannot make new highs or have struggled to make new highs and come down and breach this particular level, then it may have started the wave 4 consolidation, wave 4. Okay, so bear in mind this particular price point in the Dow Jones is inflection point, 33,572. Watch that out. You can mark it on your chart or mark it on your notebook to note this particular point. If the market does not unable to push through for new highs, then this is a particular what do you call that price point that you want to have a look at and remember. So move on to the 4-hourly chart. Okay, just remember that this is this chart was April 29. I have an updated chart later. So this also shows that the 3,000. This is a 4-hourly chart. Okay, which is currently on wave 4. Okay, wave 4. That means it is on correction wave. There's still one last fifth wave projected on the 4-hourly chart. Okay, it's expected to take out the 34,000 levels and create new highs. Okay, but currently there's still a bit of struggle, right? It's consolidating. You'll see in the next chart. The target zone for this wave 5, okay, which is going to coincide with the daily charts as well, is the 34,900 level. Okay, so as we said, this 33,572 level is one level you need to watch out, because if it breaks below the wave 4 low for the 4-hourly chart, then it is pointing to a possible correction going to for the daily charts. So we move to the updated charts. As you can see, right, still in consolidation, still finding a bit challenging to break this high, this 144 high, still struggling a bit. If it does, then it'll push us to the new highs. Okay, but again, watch this 33,572 level. Okay, so that's the look at the E-mini Dow. Okay, as it is, there is a possible correction coming along the way, but there's possibility. Just look at the 4-hourly charts or the daily charts to see whether it can break through this wave 3 high or not. If it does, then there's still more legs up before this consolidation. Okay, we move down to the S&P, right? Of course, the S&P is in sync with the Dow Jones bulls as well. And you can see the remarkable recovery, especially in the S&P. The S&P was down that time, March last year, at 2,174, and now it's trading at the 4,000, almost 4,200 levels. The high was 4,211. So this is a weekly chart. A weekly chart mirrors the type of trend that the Dow is in. Okay, it is in third wave as well. So this is in terms of the mid to longer term, it's bullish, right? It's covered recovery from the March 2020 lows. The immediate target zone for wave 3 on a weekly chart, okay, is 4,600. All right, so you still have quite a healthy 10 to 15% move from this area in terms of the weekly chart, right? Of course, in terms of looking at weekly chart, this longer term, it's not going to happen this week, next week. We're talking about next couple of months, right? So wave 3 immediate target zone 4611 with still potential if there's strength and the fundamentals in the markets come in and help, then potentially it can scale to a target zone of 5459 to 5671. Okay, so very bullish picture for the S&P 500 in terms of the elliott wave on the weekly charts. So let's move down to the daily charts and have a look at what's happening. Okay, so even on the daily chart, you can see that it's mirroring the Dow Jones, right? It's in wave 3. So this wave 3 daily and wave 3 weekly, again, a very bullish scenario in terms of the synchrony of these waves, okay, in the Elliott wave, right? Currently, you can see over here, last week it was struggle. In fact, it made one new high, I am not mistaken, on Thursday, and then now consolidating, okay. Yesterday, there was a drop because in terms of the S&P, as the S&P components of the S&P also have a lot of technology stocks. All the big tech stocks are there. In fact, I think, I'm not mistaken, the tech stock component of the S&P is almost like 20% weightage. So yesterday's move on the NASDAQ had quite an impact, and we will see later in the short-term charts what that impact is. Right. So in terms of the daily chart, the wave 3 immediate target is 4455, and with the next projected target zone at 4,008 to 5,000. Okay, so all these price levels are currently still in play. Okay, but watch this momentum on decline. Okay, this is something that you need to watch. What that means is the prices have been going up, but the momentum have been slowing down. Okay, the push is not strong enough. So in order for it to push to this new target zone, the momentum here needs to pick up and exit this high over here. Right, so this is something that you want to take note in terms of the S&P, right? That's why we say there's possible a pit stop ahead for the bulls. Okay, take some time, perhaps in wave 4, to refuel before the next up wave on the wave 5. Okay, so this is the E-mini S&P daily chart updated to this afternoon. As you can see, yesterday's trade, okay, there was quite a long bar on the S&P, touched the support level at this particular line. But this particular point over here is also quite important to have a look later. Let's see whether we can define this point. This area is about the 4,001 levels. Okay, this is the inflection point that you want to watch out for the S&P. Very important point as well, very similar to the Dow Jones. This is the particular point that you want to be aware of. Okay, later let's see what this particular inflection point is. Right. So you can see the momentum is still down. Yesterday, of course, with that down bar, the bar on the momentum is also down. Okay, so in terms of looking at the 4-hour chart, okay, remember again, this is last Thursday. The consolidation seemed to have been completed. In terms of the completion of the wave 4 consolidation, okay, it had this similar, what do you call that, movement like the Dow Jones. The Dow Jones was in consolidation 4 as well in the 4-hourly chart, but the Dow Jones has not come out of it. But the S&P seemed to have come out of it because it broke through the wave 3 high. So in terms of looking at a particular trend, notwithstanding what has happened yesterday, this would have been very positive for the S&P, right? So in terms of looking at that, we need to update this chart, and now we see it this way, right? So the long consolidation, it did a high there. Possibly in terms of looking at the wave, the 4-hour wave, it could have completed with the wave 5. Okay, so looking for the consolidation here, which has started the last 2 trading days. Okay, this is the level you want to look at, the 4,100 levels. This is the inflection point, and wave 4 low here is very important to defend the current uptrend. If it breaks through this particular trend, this 4,001 level, okay, it's about 4150 level. If it breaks through, then you will see even the daily chart go on the consolidation or the wave 4 consolidation pattern. Right, so this is something that you need to look at. Okay, if you can defend this particular price level of 4,150, then there's still that last particular push that you can go through to create the new highs. We look at NASDAQ. Okay, NASDAQ has been a fantastic run. Okay, this looked like this marathon bull, but currently we've seen some signs of tiring. Okay, the pace could slow down after it has actually for the weekly chart on the NASDAQ. Okay, it's also on wave 3, but it has actually close in on the finish line. The first target zone of wave 3 12,937 and 13,528 is actually has already exceeded that target. Okay, there is another potential extended target at 16,000 if we can garner the momentum. Okay, but you can see over here as well, there is a divergence in the momentum versus the price. What does that mean? That means that prices have been going up, but momentum has been coming down. Okay, so this is the difference in weekly chart between the Dow Jones and the S&P. The S&P have been seeing peaks in its weekly momentum, whereas the NASDAQ have not been making new peaks on the momentum, right? So it's basically inferring, or you can interpret it as in terms of the NASDAQ, they're very possible to see a consolidation coming very, very soon. All right, so let's go to the daily chart. So in terms of the daily chart, you can see as well the recent momentum peak, which was a wave 3 progression. Possibly some time to play out in terms of the daily chart. Maybe it's inferring that there's a possibility of that. And at that point last week, the 13,700 level is a very important point to defend. And this point was breached yesterday during that sell down on the tech stocks. So the picture for the NASDAQ perhaps is now has gone to a possible consolidation wave, right? So a lot of profit taking and a lot of possibly some downside seen in the NASDAQ for the short term, right? So you can see over here as well, the momentum decline. But for the wave 3, for the daily chart, the important thing is monitor the momentum. If it goes below 0, okay, currently it's still above this 0 line. If it goes below 0, then it's confirmed a wave 4 consolidation. Okay, so over here, this is the updated chart. This, you see the breach yesterday. Daily breach below that. It was quite a strong sell down actually last night. Breached this 13,700, very important level, but the momentum has not gone below 0 yet. Right? If the momentum cannot pick up the next 1 week, then it's possibility of this momentum going down to 0, and then which confirms that the wave 4 consolidation has already started. Okay, so this is something that you really need to look at, because the NASDAQ is possibly looking a bit different from the Dow and S&P. But also bear in mind, in terms of the US indices, most of them, if not all of them, will move in synchrony, right? So a huge sell down, of course, in the NASDAQ will have a very definite impact on the S&P as well. Okay, so let's see whether the NASDAQ, watch NASDAQ carefully, whether it can survive this particular down leg or not. Okay, because the NASDAQ is very, very fast in recovery, as you can see, even in the March-April zone. Once it's come down, it did a very quick recovery. So this is something you need to note about the NASDAQ. Right, so this is the daily chart. Let's go to the shorter term chart. Okay, this was last week, of course, not breached yet, but now it's already breached. So there's possibility that the wave 5 consolidation or even has failed to materialize. Okay, so it's currently at this particular juncture. This is updated today. Okay, so the wave 5 could have been completed already, although not making a new high, but this already may have completed and done the corrective wave. This is the ABC wave. Okay, now the question is, at this current point, will the NASDAQ finish this down move and then pick up and make new highs? If it does, then it's going for that wave 3 to continue wave 3 on the daily chart. Okay, and this is something that we want to keep note of. Right, so if it continues another new low, then you can see a deeper correction for the NASDAQ. Okay, later probably we'll go into the live charts and see any new developments the last couple of hours. But this is the outlook and the technical view of the phase and momentum for all the 3 indices on the US markets. So now the thing is this. Okay, now that you know the particular phase, okay, you know the particular momentum of this, how do you take advantage of the opportunities that would be available All right, so we talked about wave 3 just now, wave 3 of 3 being a very strong particular wave, but possibly momentum move down consolidation. So the consolidation, for those who are bullish on the market, may be the opportunity for you to put in positions when it's consolidating. And for those of you who are on shorter term trading, perhaps those are the opportunities for you to short intraday or even within the next couple of weeks. So those are possible scenarios that are playing out in all the 3 charts. So let's have a look at the CME Group products and what are the trading opportunities that are available with the CME Group suite of products. Okay, now I want to talk a bit more time spent today on the micro E-mini futures performance. These are the micro E-mini futures is the exchange, CME Group's the most successful product launch in the history of CME Group. Okay, and these 4 products in the micro E-mini futures index suite is of course the micro E-mini S&P 500, the micro E-mini NASDAQ 100, the micro E-mini Dow, and also the micro E-mini Russell 2000 index. Now, you've seen the charts just now. Those were the E-mini charts. Okay, the micro E-mini charts, of course, move almost in parallel all the time because it's very it's basically reflecting the movement of the underlying E-mini contract. So this particular contract has been so successful at currently as it stands. Over 700 million contracts have been traded since launch. Fantastic. And the average daily volume traded in March of this year, just 2 months back, was 2.8 almost 2.9 million contracts daily, okay, across all the 4 indices. And in fact, in March 4th, it recorded a volume of 5 million contracts in one day for all the 4 indices, right? So this is a very interesting contract because it enables a lot of participation, especially for individual traders, because the contract is not too big. If you look at a E-mini contract like a E-mini S&P or a Dow or a NASDAQ, these contracts have, because of the advancement in the price of the index, it has become rather expensive to trade that particular product because the contract size is very big since the growth of the US markets, right? So the micro E-mini futures has been a tremendous attraction for a lot of individual traders, and it's one of the favorite US index products, also in the Asian hours. Right, so let's have a look at what are these micro E-mini index futures. Okay, as we said, it's comprised of 4 products: the S&P micro E-mini, the NASDAQ, the Russell 2000, and the Dow. Right. So in terms of looking at the contract size, right, this had comparison across the 4 indices. The S&P 500 is basically $5 multiplied by the S&P 500 index. Okay, that's the contract size. Right. In terms of comparing it to the traditional E-mini contract, which is actually 10 times larger, right? So in terms of contract size, that will be the normal E-mini contract is $50 multiplied by the index, right? So in terms of contract size, just looking at the S&P, let's say, for example, if we assume the S&P to be at the 4,000 levels, just for quick calculation, then the size of the S&P contract would be $5 times the S&P index, which, let's say, $5 times 4,000 index points. That will be $20,000 for that contract size, right? So that's how you calculate the contract size. In terms of the NASDAQ 100, it's $2 multiplied by the NASDAQ index, right? So in terms of the size of these micro E-mini NASDAQ 100, you multiply, say, for example, the NASDAQ at say 14,000, make it easier to calculate. So $2 US multiplied by the 14,000 NASDAQ index, that will make it the 28,000 US dollars in terms of the contract size. Right. So in terms of the micro E-mini Russell, if you're trading Russell, you have interest in Russell, then it's $5 times the Russell index. And for the micro E-mini Dow, it's 50 US cents multiplied by the Dow Jones. So if the Dow Jones now is trading at 34,000, then you basically multiply that by 50 US cents, you will get 17,000 US dollars for the contract size, right? In terms of looking at this, the multiplier, the $5, $2, $5, and the 50 cents, you can also basically understand that for every single point in the S&P, let's say, for example, if you bought a futures contract in the S&P, every single point increase in the S&P would mean that you have $5 added into your account, okay, profit, if you are, if you bought the S&P micro E-mini futures contract. And for the NASDAQ, of course, if you bought a NASDAQ contract and it say went up by 10 or 100 points NASDAQ, then you have made $2 multiplied by 100 points in the NASDAQ, right? So that's the multiplier. The $5, $2 are the multipliers, and those also means that every single point that's how you multiply it. Okay. In terms of minimum ticks, of course, minimum ticks are smaller, right? So in terms of looking at each of the minimum ticks, of course, smaller than the index points. The E-mini is a quarter of a point. Likewise for the NASDAQ. The Russell 2000 is 0.1, and then for the minimum movement in terms of the Dow Jones is 1 index point, right? So multiplied, then you get the dollar value of each tick. All right, these are the contract codes on the exchange. MES for micro E-mini, MNQ, M2K, and 1MYM. Okay, so this is a cash settled contract, and I want to it's traded almost 24 hours, as you can see over here, the trading hours. Okay, almost 24 hours right over here. And I want to draw your attention to the margins. Okay, margins are basically what is required to have minimum in your broker's account to trade one contract of the individual micro E-minis. And you can see over here, to trade one contract of S&P 500 micro mini is US 1,100. So it's not a very, in terms of the initial margin to trade this contract, it's not a lot, right? Basically, in terms of you multiply by ringgit, is 4 times this, so it's about 4,500 to trade one contract of the S&P micro E-mini. So it's relatively affordable, and that's one of the reasons why you find a lot of traders are able to participate, because it's a lot more affordable in terms of the size of the contract for people to participate, right? If you're buying the traditional E-mini contract, then it'll be 10 times above, 10 times this particular margin. So you'll be 11,000 instead of 1,001. So that's rather more pricey for individual traders. As you can see, for NASDAQ, it's 1,600. With 1,600 US dollars minimum deposit, you can participate in the NASDAQ movements, right? For the Russell 2,650, and for the E-mini Dow, it's 900. So very, very affordable in terms of the margins to trade these products, right? So this is one of the attractions in terms of the micro E-mini index futures. So let's move down. Why do you want to trade micro E-mini futures? Of course, number one, these are the most liquid equity index futures in the world. These are the major US indices that every night the Asian hour, or Malaysians or Singaporeans or the Asian hours reference during the evening, right? So whatever happens in all these indices will have an impact in the next day in the Asian hours, right? Of course, if you are trading this E-mini, gives you a lot more versatility in your strategies, of course, compared to traditional stocks. You can go short in the micro E-minis, you can short the indexes, you can short NASDAQ, and there's opportunity, of course, to make money on the short side, right? So if you remember last year, of course, during the beginning of the year, where there's this huge movement downwards, a lot of traders who shorted the market, of course, made quite some handsome profits in terms of going short. So that gives the ability for you to trade both sides of the markets, right? Not only on the long side, but on the short side as well. Right, and then if you build a big position, or you build a bigger position, let's say, for example, you started small and now you have a bigger position in either of these micro E-minis, you can always be able to offset it with the big E-minis as well, right? There's an opportunity of a 10-to-1 offset. You can offset your micros, say 10 contracts of micros to one contract of the E-mini. So that's one of the abilities that you can do as well. So you can actually, let's say for example, you want to liquid larger positions, you can do it by and do a offset with the E-minis, right? So of course, those who are looking to trade futures are looking for the leverage value, right? So in terms of leverage, as you can see, just now we had this example above where you can trade a NASDAQ, two times NASDAQ. Okay, say NASDAQ is at, let's give an example, at 14,000. So it's a 28,000 contract, but you're using 1,600 US dollars to trade the $28,000 contract size, right? So that's the leverage. And leverage, of course, you have to be careful. Leverage is can work both ways, of course. If it works for you, it enhances your returns. But of course, in trading the futures, you always need to have, of course, your stop losses and your risk management so that leverage don't work against you, right? Because leverage can work for or work against you, but with very proper use of stop losses and risk management, then you can manage your risk on the leverage, right? So basically leverage is you can control a large contract value with a small amount of capital, right? So that gives you a lot of greater upside and potentially what do you call that, better returns if you catch, compared to also if a lot of people also trade ETFs, index ETFs and all that. Of course, with ETFs, you may not enjoy the kind of leverage or the cost, right? So these are the very compelling reasons for trading the micro E-mini futures. Okay, we take a bit of time to just compare the traditional E-minis. Okay, this one we do a quick one, right? So you can see basically the comparisons is the is a 10-fold contract, 10 times bigger than the micro E-minis, right? The rest of them are the same. Margins as well is 10 times. Of course, it's more expensive, right? Dow is the same. You can see in terms of the dollar value, it's $5 against 50 cents per dollar move. And margins as well, it's the micro E-mini is 1/10 of the margin requirements, right? So this is the NASDAQ. Similar comparisons. Also the Russell 2000. Okay, similar. The micros is 1/10 the size, right? So this is take an opportunity to have a look at it because this is a very, very liquid contract, and a lot of traders have been finding it a fantastic contract to trade. Okay, so in terms of an example for those of you who are not who are new to trading futures, just a quick example for you on how to buy and sell the futures and how the profits are calculated. Let's say, for example, is a bullish example. Okay, if you feel that NASDAQ 100 can continue to break new highs, okay, you say that, okay, NASDAQ sell down yesterday, I think that's the end of it, so we want to buy the NASDAQ. So here's an example of it. Suppose you buy the June micro E-mini NASDAQ contract trading at 14,000. You would, of course, in a futures terms, called long a futures contract by buying one contract of the NASDAQ MNQ. This is the price, you buy it at 14,000. Okay, so there are two scenarios, of course. If June futures continue to rise, it goes up to 14,100. You would have made 100 index points, right? You bought at 14,000 and now it's at 14,100. Then you have made 100 points multiplied by per contract. Okay, as you can remember just now, for the NASDAQ, it's $2 per contract. So you made 100 index points. That will have a profit of $200 in your account. Now, of course, not every time the market will go for you. It's possible that you bought it at 14,000. It could go down to 13,900. In this case, you would have a loss of, oh, sorry, here there's a typo here. Okay, excuse me for that. There is a 100 point loss multiplied by 2, you have a $200 value loss. right? So in terms of looking at the P&L, if the markets go for you and if the markets go against you, this is how it's calculated, right? In terms of shorting the market, let's take a bearish example. So if you feel that, say, the micro E-mini S&P is perhaps going for the wave 4 consolidation, then you can sell the June micro E-mini. Say, for example, if it's trading at 4,002, you sell or short one futures position at 4,002, and if markets actually drop down to 4,001, then you would have 100 S&P points of profit multiplied by one S&P point is $5, so you made a $500 value gain, right? So in terms of June micro E-mini, if it rises, okay, when you short the market, if the market rises, then of course the market has gone against you. So that will be, let's say for example, you shorted at 4,002 and went up to 4,003. Of course, it's against you by 100 points. Then that would have been 100 points multiplied by 5 US dollars, which is a $500 value loss. Right. So this is how you basically calculate the P&Ls for the futures market. Just a simple example for those who are new in trading the futures market. Right. So in terms of looking at that, okay, maybe it's a time that I can quickly go in and let's check the live market. Okay, let me see whether I can get myself to the browser. Okay, one second. Okay, let's have a quick look at what's happening in the US markets. This is the 4-hour Dow Jones. It's still there. Okay, let's maybe look at the hourly to see whether there's some action in the hourly. Okay, hourly still looks like okay. Well, what you can see over here is in today's trading action on the hourly, it's actually created some new highs, but it's still struggling over here. It needs more momentum, right? The good thing is it's gone out of this negative range. The momentum has risen up again, right? Yesterday, the sell down, it has already recovered from the sell down. Okay, and it's come back up to make a new high. So it's very positive in terms of the shorter term for the Dow Jones. Okay, this is the hourly chart. So this is good in terms of looking at the hourly chart. So it has not violated the 33,572. This is the inflection point that we spoke about, okay? But you could see the long consolidation, the whipsaw over here. So the market has been very tentative in this zone, okay, since 21st of April, okay? In fact, if I just draw it back up, since it made its high on in April 19, it has consolidated over the so many trading days, right? 1, 2, 3, almost like 2 weeks of trading in the range. Okay, so now one thing you need to notice is if the market has been in a range for a long time and then it breaks through, then there's what that means that it's already overpowered all the resistance over here and then broken through. Then the upside is a lot stronger when it has broken through a very strong consolidation range. Okay, so we'll look out for that in terms of looking at the Dow, whether it can continue to power through this particular point, right? So this 34,140 levels is so far in the last 2 weeks of trading has been formidable. So we have to see whether that can be surmounted. Okay, so let's go and look at the S&P. Okay, this is the S&P in terms of the hourly. Okay, so this was yesterday's trading, and you know it's managed to recover, and you can look at the hourly trend. In terms of hourly trend, the momentum has gone above zero as well. That's good news in terms of the recovery of the S&P. So in terms of it, you can over here you can see as well this particular inflection point we were talking about, the 4110. Okay, so this basically in your mind, 4001 is a very important point for the S&P. Okay, the good thing to note is of course the S&P had created last week a new high. So whether this particular correction has ended, we will have to continue to monitor. Okay, in terms of the shorter term. Let's move on to NASDAQ and see what's happening in NASDAQ. There was big action in NASDAQ. Okay, has NASDAQ come out from the woods? Well, if you look at the momentum, it's still in negative zone. So in terms of the NASDAQ, it's still weak. Okay, although we can see the momentum since the low is picking up. Okay, so if today, let's watch, if you're watching the US markets tonight, to see whether this market can continue to move up higher, right? As of this last couple of hours, it's able to make higher highs, so that's a positive for NASDAQ. And remember, we said just now, NASDAQ really need to push through to move to that new high. It needs quite a lot of momentum to move it through. So as it is, it's still in negative zone. So still possibly some weakness, and unless it can pick itself up from here. Right. So this is the shorter term look at all the three indexes. We will have now some time for some questions. If you have some questions, do put it into the question box, and Yunxing will help me with the questions. So Yunxing, do we have any questions currently? Back to you.
Thank you, Mr. David. Currently, there's no any question. If the audiences have any question, kindly key in your question so we can address it.
I have a question come out here, basically asking me what is the indicators you are using on the charts. Okay, because tonight they want to monitor momentum, but what momentum is this that I'm showing here? Okay, so just perhaps let me take an opportunity to explain what this momentum indicator over here. So I haven't displayed it. Let me display this. This is actually the AO. Okay, it's the Bill Williams Awesome Oscillator. Okay, so if you're using a lot of popular charting platforms or charting technical charting tools, if you go into Bill Williams Awesome Oscillator and you put that into your chart, and this is the momentum chart I'm looking at, right? So if you are following tonight's charts or any of the charts that I'm using, okay, say for example the NASDAQ Daily, okay, normally incorporate this momentum charts in it as well. So this is the AO, okay, Awesome Oscillator. Okay, it's called the Awesome Oscillator. These lines, the three lines here, it's called the alligator. It's also a Bill Williams indicator. It's my favorite indicators. It's very, very helpful in terms of looking at the face of the market and also at the Elliott waves. So that's what I use. The arrowheads here is the fractals. Okay, also from Bill Williams. Obviously, you see that I'm a Bill Williams fan. My guru for a long time. I've followed him for almost like 20 over years. Very helpful. Okay, so for those who want to experiment and try to have a look at those indicators that I use, yes, alligator, Awesome Oscillator, and fractals. Those are the things I use to look at. Okay, any
Mr.
questions
David.
from your side?
Yes, there's one.
Yes.
There's a question by Helen Lee. She's asking, sell in May and go away based on the current market sentiments now. Is it valid?
Well, thanks, Helen, for the wonderful question. Right? There's such a thing that sometimes that after a lot of observations, this sell in May, come back later and buy in later. It's a possible thing. So in terms of looking at all the three charts that we saw just now, and there's a possibility that those charts are going into a consolidation phase. So it may come and fulfill that particular very popular things that they say on a yearly base after May, when they see some downside coming in, it may come true, right? But if you sell in May last year, then that would have not been true, right? Let's say, for example, May last year, if you sold in May, that you have lost a lot of opportunity, right? So yes, sometimes it's true. Sometimes people, these popular sayings can happen, okay? And it does coincide sometimes. It may coincide this year, I don't know, right? It may, but it was last year. it didn't happen, you have lost a huge opportunity following that saying. Okay, so instead of following popular sayings, I think it's better perhaps to follow a chart. Okay, I would recommend you following a chart instead of the popular saying. Okay, I hope that answers your question, Helen.
Okay,
Okay.
there's another question for Mr. David by Promogan Perumal. So as my point of view for NASDAQ, as I can see that it's like a double top correction in progress. So is there any possibilities whether the correction will be over and reverse back?
Okay. Now, remember what we said about the wave, impulsive wave in added wave. Now, but first and foremost, of course, thank you for that wonderful question. Now, in terms of looking at the impulsive wave on this trend, okay, and that applies to all the all the 3 US indexes, right? After wave 3, okay, so currently a lot of them, in fact, all of them are in wave 3. Some are maybe possibility of wave 4. In wave 3 will be followed by a wave 4. Okay, let me see whether I can give you an example. Okay, let me see. If I don't have it here, okay, maybe I don't have it here, sorry, but let me explain the theory behind it. Okay, now let's say, for example, if let me take out a chart of the S&P daily. Okay, this is the S&P daily. Okay, now we have a 1, 2, 3 wave, okay, over here. Now, let's say, for example, wave 3 has completed, so it goes on consolidation. Okay, that's what you say. So after this consolidation, does it have a chance to come back up? Okay, so in terms of the added wave theory of the impulsive bull wave, there is 5 waves. Okay, so after wave 3, there will be a consolidation. Okay, and normally the consolidation will be about 50% retracement of the wave 3. Let's say, for example, from here to here, this wave 3, there will be a 50 to 62% retracement, and then it will be followed by this up wave on wave 5. Okay, so in terms of trading the added waves on the impulsive bull wave, the favorite waves to trade is wave 3. Okay, of course, wave 3 already progressed. Okay, so for those of you who may have missed wave 3, there's another chance. Okay, in terms of the next couple of months, okay, or next half year or next year, there will be this wave 5 possibility, right? Which is the theory predicted by the added wave. So possibility of another new highs coming in on the US indices based on that theory is a high probability, right? But you would have to go into the wave 4 consolidation first, right? So that is coming around the corner, right? Some of the S&P or Dow may make new highs still for the wave 3 to reach their targets before going to wave 4 consolidation. But it is at that particular point, because we are seeing on the shorter term charts that it's already in wave 5 correction and all that, right? So the correction is imminent, but don't discount the fact that wave 3 can still do the last tail end of it and still make new highs. But in terms of wave 3, you're probably at the last 10% or last 15% of that particular move. Okay, after that, the corrective wave 4 comes in for, say, a 50% correction of the wave 3 or 62% of the correction of wave 3, and then that particular wave 5 is the wave. If you are a bull trader, okay, if you don't short, some people love to short that wave 4 as well, but if you don't short, then there's another opportunity for you to look out for that buying opportunity in wave 5. Okay, so I hope I've answered that question to you, Morgan. All right, do we have another question?
That's all for today, Mr. David.
Okay, fantastic, and thanks everyone for the questions.
Okay, so to all the audiences, if you have any question, do contact us and we are very happy to assist you. Last but not least, check out our TIGIF promo and grab the opportunity to join it. With that, I will end the session for today. Thank you everyone for your time to join our webinar today, and also many thanks to Mr. David Loh.
Thank you everyone, and keep safe and stay healthy.
Good night everyone, and stay safe.